This is my tell sheet. I believe that if you can gather enough data, both historical and future projections and current, you can predict what the price of a stock will be if you go out far enough so that you aren't influenced by the day-to-day activities and news. But if you'll go out far enough, and I have chosen a 3-year period, and if you're in a category that has some tremendous growth potential, and I have chosen the semiconductor, the AI, data center, general area, you can predict what the price of a stock will be. And I do that on 60 stocks that I choose to follow. The one that I want to talk about today is NVIDIA, and I want to talk about it today because yesterday they had their earnings report, and I spent the night gathering the data, gathering the information, then making this video so that you could have some insight as to where NVIDIA is going. Because, and I think it's important because I think the market got it wrong. They don't understand, and that's okay. That's okay. I watched it and so I know it. So here is what I do. I go in and I track what a stock, and this is NVIDIA here. I track what their growth in earnings are going to be over the next 3 years, average, what their current PE ratio is. And then I use a number of metrics to give me different projections on what the price is going to be. Then what I did last night was gather all the information that I could from NVIDIA's earnings call. I went into their 10K filing and I pulled out their spreadsheet. So I had a copy of their balance sheet and their income statement and their cash flow. And I then added to that the transcript from the earnings call, several articles that I could find as to how other people, how other analysts were interpreting. The deep dive is about a 15-minute podcast, which I have Samantha and Brad speaking about the information to give an understanding. Then what I do is create a briefing on that summarizes the deep dive, and then I create what is called the financial health. This is my deep into what the financial statements are saying and what the CEO Jensen is saying and what they're projecting into the future, and then drawing some conclusions. So that's what I do. Then from there, what I do is estimate what the price of the stock is going to be on January the 1st of 2028. This is my portfolio. I bought NVIDIA so about a month ago, I guess, for $129.84. I had bought it a long time before, took the profits as it came down, then I bought back in. I have 190 shares. I am projecting that on January the 1st of 2028, the price on NVIDIA will be $250.65, and I will show a profit of 93% from where I bought it to where it will be on January the 1st of 2028. Now, what I want to do is show you how I came to these numbers so that you have an understanding, so that if you want to duplicate what I'm doing, you can. So let's go to my evaluation. That's right. What I'm going to show you is what this link would show you if, in fact, you clicked it. This is my evaluation of the corporate health of NVIDIA. And again, it is drawn from their financial statements and their earnings call. So it is saying here, as it said on the thumbnail, that their year-over-year revenues increased by 114%. And yet the market has them down pre-market 1.5% roughly. And when I saw that, I thought, wait a second, I just did one on Supermicro, and they didn't have this kind of a good report, and they were up 20%. So I wonder how people are interpreting. And I understand, I think they probably believe that NVIDIA is overpriced. But let's go on. Gross profits grew from 44 billion to 97 billion. That's over a 100% increase. Net income surged from 29.7 to 72.88, more than doubling for the year. And then their earnings per share for the year went from $1.21 to $2.97. And yet, the price is down 1.5% in pre-market. So you need to understand, maybe the market doesn't always get it right, okay? Or maybe they've got something else in their head that's eating them up. And let's see if we can find what that might be. Operating efficiencies, the operating expenses increased, as you would think they would, and it's primarily due to research and development. And where do I get this? Well, I go to their income statement, and I can see what the numbers are, and then I can determine what they are. Operating income went from 32.9 billion to 81.45 billion, reflecting the increased profitability and despite higher expenses. So everything is going in the right direction. Liquidity. Cash and marketable securities didn't quite double, 25.98 to 43.21, showing that they have a lot of liquidity. They have the money on hand to do what they want to do. Now, their accounts receivable went up substantially, and if you'll remember from the similar analysis I did on Supermicro, their accounts receivable went up substantially. Now, this reflects probably higher sales, because I don't know, because I've never bought a GPU from NVIDIA. I don't know what their terms are. So it may be 90 days, it may be 30 days, I don't know what they are. But the fact, I would guess it's 30 days or something of the like. But because their sales were so high, their accounts receivable would go up. Inventories are also up. Again, this was something that Supermicro had reported, showing a preparation for future demand. Total assets have increased by 70%, and again, a very positive thing. Total liquidity has gone up primarily due to higher accounts payable and acquired liabilities. What does that mean? Well, they're making more semiconductors. They've got accounts they have to pay. They have engineers and outside sources they have to pay. So their accounts payable is higher. Shareholder equity increased from 42 to 79, driven by stronger retained earnings. What are retained earnings? All the profits they have left after they pay all their bills and expenses and such. So cash flow analysis increased from 28 to 64 billion, reflecting higher profitability and cash generation. Accounts receivable, and we already covered that. Capital expenditures increased, reflecting investments in data centers and AI infrastructure. I think that's to be expected. Stock repurchase increased significantly to 33.7 billion, indicating strong capital returns for the shareholders. Debt repayment, no major adjustments to debt. Very dissimilar from Supermicro's yesterday, where they took on a tremendous amount of debt, and yet they went up 20%, and we're down 1.5. I don't know. Growth drivers, I don't think we know what's growing this stock. The future outlook, and they're guiding up gross margins to expected to hit 71%, operating expenses forecast at 3.6 billion. Then the thing I think most of us really want to know, what's the price of the stock going to be on January the 1st of 2028? That's what, at least what I want to know, because that's how I invest. So what I do is I adapt a conservative, a moderate, and an aggressive projection. So, and what I'm showing you here is their 2024 earnings. And then I'm going to show you what they are anticipating their 2025 earnings will be under a conservative, a moderate, and an aggressive. Where do I get these numbers? I get them from Wall Street analysts. They make that available. Now, then in order to come up with a price, I need to have a PE ratio. It's because all the price is your earnings per share multiplied times your PE ratio. So what kind of a PE ratio do I assign to it? Well, its average over their past 5 years is 47.9. So I choose a conservative of 40, a moderate of 45, and an aggressive of 50. Make sense? Does to me, and that's what counts. So, so then I again from the Wall Street analysts, I get their conservative, their moderate, and their aggressive earnings per share in 26. In 26, and then again in 27. And so since what I'm interested in is because I don't want to be involved in all the rigmarole that goes on a day-to-day basis, what is NVIDIA's most probable price going to be on January the 1st of 2028? And that with a moderate price, our earnings per share of $5.50 and a moderate PE ratio of 45, I believe the price is going to be the $250.65, and that's exactly the number I showed you on my tell sheet. So this is how I analyze stocks. Now, again, I want to go back to the tell sheet, and all the information I just gave to you is right there. The health, and that's a link that will bring that up. Now, this is the deep dive. This is the a podcast of about 15 minutes that discusses the ins and outs, the ups and downs, and what we believe the future of NVIDIA looks like. And then this is a printed version of the podcast, which will give you some more information. And as you can see, I just updated it yesterday. So that's how I analyze stocks. I make this available to my tribe members, and I charge them $19.95. I do all the work. Now, you can do this yourself if you want to. I use a lot of AI, and I use a lot of data that I pay for. And so what I'm basically saying is if I can build a community of 10,000 people who pay me $19.95 a month, I'm going to have enough to buy all the data I need. I'll have the money to upgrade Samantha to where she does a lot of this herself, and then we as a community can finance it. That's what I'm doing. So if you want to be a part of it, I invite you to go put in your credit card for $19.95. If you find it's too complicated, it's not something you want to keep up, you just cancel. And we depart friends, and hopefully we stay together and we all become stinking wealthy. Okay. So, I don't know. I'm anxious to see what the market does to NVIDIA over the rest of the week. I'm going on a cruise the following week, so I won't give a damn. But anyway, this is Kerry's Tell Sheet. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I stay up late at night to give you good information.